Good morning, everybody. Welcome to the new week. Good morning, Kay. Good morning, Stel.
Good morning, Ryan.
Good morning, lads.
Good morning, Stelios.
How was your weekend, boys?
School started here today, so I'm very, very happy.
Celebration time.
Yeah, hey. Oh, good. It was very, very warm weekend here. Very warm.
Yeah, good way to finish it off then. Chuck the kids out the car without even stopping and see you later.
Something like that, yeah.
Yeah.
How was your weekend, mate?
Yeah, all good, mate. Thank you very much. A bit quiet. Nice to just spend some time with the family, catching up on some jobs. Yeah, nice, easy one. How about you, Kay?
Well, we went to the Weymouth Seafood Festival yesterday. Very nice. Nice,
wow.
Nice chefs showing their skills, bit of tasting here and there. It's a very nice day out, sunny as well. So
Cool.
now I've got the color of the Tour of Spain red jersey now on my head. So, but no, very nice day out here.
You're looking like a cooked lobster yourself, are you?
Exactly.
Someone will come and pour garlic butter on your head. So, anyway, I hope everyone else had a good weekend. All our viewers, wishing you all, as always, a good week ahead. Just before we start, as you can see on the screen there, that is the ForexAnalytix platform, giving you tons of analysis, news, market information. We've got the bias chart there, which the guys knock up during pretty much every day, but during all the way through the week. You can also grab a look at the options, some Forex orders that we have there that go up. These are direct market orders from the interbank. These are not retail things. Overview of the options market, which I put up there every week on a Sunday. If you want to come and join us there, and of course join the chat room, you can do so. I will pop the link in the chat room for you there, but you can just see from that screen there what's on offer in the chat room, and you can also grab yourself a 20% off your subscription using that code FFL20. Now we are going to be putting the prices up at some point in the next couple of weeks. Obviously everyone's costs are going up. We don't like to do so. I believe, and Stel can confirm, the last price rise was about 4 years ago.
That is correct. Yes.
Not something that's taken lightly. But if you want to get in, you can potentially lock in the price there before the increase. But further details will come out of that in good time. But if you want to get yourself ahead, come and join our platform, get the chat room, speak to all us boys here, Kay, Stel, everyone else, Amanda, Blake, Steve, Gregor, Leandro, Andre, all the team are in the chat room. Come along, you can join us there. So anyway, let's get stuck into things. Let's look at some of the headlines that have been out over the weekend. I'll leave that page up there, why not? Right, China's was on a holiday yesterday. I'm not sure if it goes into tomorrow, if they're back or not, but definitely holiday today. But some of the main news out from there is that the big event this week is going to be Xi meeting Putin on Wednesday. Lots of talk about what they may get up to and comments from there. Obviously, the Ukraine situation is front and center, and I'll touch on that in a moment. Now, it should be said that although these are both sort of communist leaders, there is not real any love lost between them due to previous encounters and head-to-head things that have gone on in the past. So they're not exactly usually the best of mates, but what's going to be important from this meeting, I think, is how close they may get together. Obviously, the Ukraine situation is being watched wider for the possible global implications. Obviously, China's watching it closely, what the US and the West response is to the Russian invasion, obviously with an eye on what's happening in Taiwan. And we know that situation has been bubbling. So the wider global context is still very important. What happens with all these chess moves between the US, China, Russia, the West, you name it. So in the context of that, this meeting does potentially warrant some market interest. But that's on Wednesday, so we'll see what happens then. In the meantime, and speaking on the US and China, Biden has been out, or sources have been out, saying that they could hit China with further export restrictions of US semiconductors. Again, they're just keeping the screw turned on China, really. So the global picture or geopolitical picture there is still very fraught with dangers, let's say. In China itself, there was a story out over the weekend in the F.A.C.E. That China have been providing around 30 billion of loans to countries, almost, how should we say it, taking the IMF's job and giving out loans to certain countries. It is the IMF's role to offer loans to countries, obviously for conditions who do get into financial troubles. But China has apparently been doing that the same, and this has all come out now. They call them secretive loans, but it's all out in the open. So 30 billion China have been provided some nations there. Moving over to the Ukraine-Russia situation, and that's obviously been in the news this weekend with this apparent Ukraine push or counteroffensive, whatever you want to call it, retaking some regions in the Ukraine, and a lot of the market sensing that perhaps Putin is on the back foot, soldiers fleeing, leaving their armaments behind, armory, ammo, and just rushing back across the border. There's also been some news-wise out and sources out with some videos from Russian media where it seems that sentiment is perhaps turning over there. A lot more growing dissent coming about this invasion and how long it's going to go on for, what the end result might be. Is it going to be a successful operation, and is it going to change anything? So that situation is growing, it seems. Now, there's some in the market have been saying this is behind some of this rally in risk this morning. As you can see, the euro's been well up. It did start with this morning. We saw yen getting sold off pretty heavily. In fact, we had a little, if we can show it in there, we had a little gap down in dollar yen on the Sunday opening. That's rallied strongly, so we saw a bit of yen selling. That sort of morphed into the European UK morning into dollar selling mainly. So that flipped around dollar yen there, and we've seen the euro continuing higher. As we can see now, we've just seen a little bit of sell-off in the yen crosses, but they had been trucking higher as well. Some of it down to this Ukraine situation, as I say. Gas prices coming off the boil again. Obviously, that's a boon or a bit of support for the euro there. But overall, this situation in Russia, lots of people are liking what they're hearing, and that perhaps this may lead to the end of the conflict. But I think personally, we're a long, long way from that, and in fact, could be an even more dangerous situation. Because if Putin thinks he's getting his ass kicked, he may, could turn to stronger measures to try and counter this offensive, and I don't want to say it, but increasing the types of weapons he may use in this situation. But the growing dissent in Russia, if that is true, if that snowballs, that will put some pressure on him to maybe ease back, and then perhaps we've got something that's a bit more promising on the risk front. Guys, you see anything from this latest stuff in the Ukraine? Is it just obviously Ukraine's trumpeting it from the rooftops, their gains, but does it mean we could be near an end, or does it mean things could get more dangerous?
Problem is, we don't actually, we can't know. That's the thing, right? We know what we're being fed by the media that we follow. So, but it does seem like there seems to be some kind of progress from the Ukraine side, and this will certainly help euro and sentiment in general. But again, I don't know what to make of it because I'm not there. So
thankfully.
thankfully I'm not there. But if this continues and looks like there might be light at the end of the tunnel, some kind of ceasefire or some kind of resolve of this situation, then this is going to be very, very good for markets overall. But at the moment, I can't tell. I don't know is the answer, unfortunately.
Yeah, it is a difficult situation to fathom, particularly in a market sense. Kay, you got any thoughts on that?
Yeah, I'm in the same mood and mind. We don't really know until there's something coming out. Well, well, Ukraine will claim victory. Russia may be very silent if ever they're getting pushed out. But then we already heard. Is it rumors or facts? Well, probably facts about the blackouts, but that some power stations have been hit. So. Is he pulling back his troops to go in with some, as you were saying, some more severe weapons? We don't know, right, at this time of the day. But in fact, it is a fact that it supported the euro. Also, what I found interesting on this Chinese lending to countries is that one of the beneficiaries from this lending program it seems to be Ukraine, and because they were in that list. So is China, as usual, I would say between brackets, playing a double game? Very possible. So yeah, I do think for the continuation of the events, the evolution of the events, that we have to wait for what's going to come out with Xi and Putin. Also, what I'd like to point at is that over the past weeks, everybody was criticizing Pelosi for making things more dangerous when she was visiting Taiwan, and then all of a sudden now we're getting more and more countries sending delegations over there. So is that going to influence China in some way? It could do as well, and perhaps the market is getting a little bit nervous with overstretched dollar positions. And the combination of everything has made where we are right now, in my opinion. But it's for this week, and especially with the US CPI coming up tomorrow, that also spurred people to manage their dollar positions. I think it's going to be until Wednesday, well, at least tomorrow, and then Wednesday included. We see what's coming out of that weekend, but it's going to be quicksand markets, in my opinion. It's going to be a bit dangerous for saloon doors, as I call them.
Yeah, definitely, mate. And it is a difficult situation. Obviously, we hope, mostly for the humanitarian aspect, that this conflict is resolved as quick as possible. But for us trading it, it's a bit difficult, as you say, to pin what's going to happen and how it's going to affect markets. Right, moving on to Japan, not too much out from there. We did get some comments from the Deputy Chief Cabinet Secretary, Kihara, also saying that, officials may have to do something to stop the yen weakness. Market took that as a little bit stronger as the rhetoric. I think that was behind the gap down we saw in dollar yen initially, but it's back to the same old with those guys. The Bank of Japan is touted to end its COVID relief scheme and then tweak forward guidance on those pandemic improvements or COVID improvements in their next meeting, which is September 21st, 22nd, of course. Not expected to change any guidance on any of the other policy measures, but as Kay's been mentioning last week, we could be in a situation where there's pressure put on the Bank of Japan to maybe change something in their policy guidance. We've been watching the data getting largely better, and they're getting into a situation where inflation's on the rise, and if that drags on, it's going to become more entrenched. Could force the Bank of Japan's hand on that. We've also had some ECB sources pieces out, the continuation fallout from the ECB meeting. And this one was saying that the ECB members see a risk of the interest rate hitting 2% to curb inflation. If they think it's a risk of rates hitting 2%, meaning that they never thought it was going to get that high, then they're going to remain even further behind the curve than they are already. We would expect, or I would expect their rates to be well above 2% if this inflation trend continues. So seeing a risk of rates going to 2%, a little bit underwhelming there from those guys. And that's really shown by De Guindos this morning, who said he doesn't know how much rates may rise by or where they might go to. So following on from his impressive display at the ECB press conference last week, he hasn't got a clue, basically. Kay, you got any thoughts on the Japanese comments there?
No, I think it's in the framework of the whole communications planned or communications thing that they are doing now is to keep everybody on its toes, and they realize that yen has gone a bit far. Now, I always said, like, when at the start of this fiscal year, right, which is the last year of Corona, and then seeing all the other central banks starting to hike, there's never been a better occasion to get away, or to at least water down YCC. Until now, Corona hasn't budged at all, but we may start to get some talks. So this I'm in between two seats really on what they are going to do or not. It's really it's good that they just talk about possibilities on how to move away from it, and just to mention about it, we'll probably see the market flip the big yen shorts a bit. I think a lot has been wound down over the past week, at least for the short to medium term traders. The long term traders are probably not budging yet. There's just a feeling, but maybe there's some very long term positions that been put on, or long term positions put on last year, which would still be in the pipe. But we have seen hedge funds, I think it was Blue Capital or Bluebird or Capital, calling for a top in the dollar yen for now at least, and perhaps Bank of Japan starting to move. So I think it's a possibility in the meeting or in the upcoming meetings, because the window has never been as open as it is now, and it might close quickly if elsewhere CPI comes back down. Yeah,
and just there was a story out from Bloomberg, just on hedge funds saying they may stay dollar long because there are no better alternatives. This was citing the CFTC data, which showed leverage funds boosted net dollar longs to 2.45 billion as of last week, and that's compared with net shorts of 51 million the week earlier. So a big turn long there, and they double bets.
Can I ask
bearish bets on the yen to 2.1 billion.
Yeah,
that's Ryan, quite a big swing.
Ryan, can I ask you something? Is that net amounts, or are there's a number of contracts? It seems net amounts.
Yeah, I think it's the value of the contracts. Yeah,
I'm going to say something that which may disappoint people, but $2.5 billion is nothing in the sea of foreign exchange. In the ocean of foreign exchange, $2 billion is nothing. I mean, we are seeing $2 billion option expiries left, right, and center. I don't see why people are making such a huge deal about $2.5 billion. Some funds are taking that on in the space of a couple of days. So I don't see. Okay, for the information side of it, perhaps.
I think it's more the swinging sentiment.
Yeah,
that's the big deal there. But yeah, I mean, it's a fairly decent amount in futures. I mean, remember, this isn't spot. This is futures contract. You know, I can look into the the numbers themselves, because they can range from in contract terms 60,000 lots, 100,000 lots, that sort of thing. But it's for something like leverage funds to do a flip like that, I think is what the main point of the story is here. Now, is that a time to go fade it? And this is a different part of the CFTC report that is usually reported. That's usually non-commercial, i.e. Speculative trades. But there is the other side of the report is they list the numbers from leverage funds, hedge funds, that sort of thing, all institutional side, which is probably the better part of the report to watch. Not that I watch in a great deal anyway, because I've seen CFTC positioning sit offside for many months and even years on the wrong side of market moves. But as I say, it's more the swing from short to long that just seems to have caught these guys' eyes. So I just wanted to flag that up for everybody. So moving on, just going to look at the data quickly, what's happened and what's coming up. We had UK data out this morning. GDP, monthly GDP, missed expectations there, 0.2%, but did come in higher than last month's minus 0.6% there. The three-month GDP change, which can be used as a sort of quarterly number, came in flat versus minus 0.1% prior. Nothing special there, but it's not into negative numbers at the moment there. Industrial production out as well. Bit of a surprise, this one. It missed expectations on the month in at minus 0.3% versus 0.4 expected and minus 0.9 last month. Maybe a bit of surprise because this sector or this part of industrial production, which is different to manufacturing production, is to do with things like mining, oil and gas production, that sort of thing, which some might have expected to be on the much greater increase, obviously due to the energy situation going on, getting more into the market, getting more out the ground. But no, it came in negative, missing expectations. But on the manufacturing side, we did see a positive number, not as much as expected, month on month, 0.1 versus 0.4 expected. So again, perhaps some small signs that we're seeing a bit of an improvement in manufacturing there. Looking at what's to come, I'll just show you the weekly view. Tomorrow we get Japanese PPI, UK labour market report. That German CPI is the final number. So jobs data from the UK and Italy. German zoo survey, but the big number is obviously going to be the US CPI tomorrow. That's our next indication on where US inflation is at. That's going to be watched very carefully. We'll talk about that in more detail tomorrow. Into Wednesday, bit more PPI data, industrial production from the Eurozone, PPI from the US. Other than that, not too much. Bit more CPI on Thursday from France. Again, these are final numbers. Got the Aussie jobs data coming out. That's one to watch for RBA expectations there. We get the US F.A.C.E manufacturing. Oh, have we got the Empire coming out? If the F.A.C.E's in, the Empire must be out at some point, because that's usually the first number of the new month.
I think it's on the same day. Yeah.
Oh, it's on the same day. Yeah, which is pretty unusual. So that's the first look at manufacturing in the US for the new month. Industrial production there as well. On to Friday, some Chinese data there. Industrial production, retail sales, UK retail sales, and then we get the Eurozone HICP numbers there too. Final numbers there as well. And then we get US consumer sentiment, which I believe is the Michigan number. So the flash Michigan number for September there. That's not the main conference board consumer confidence there on Friday. So lots to look up to there. Obviously, as I say, US CPI is going to be the one. You guys got any thoughts on that tomorrow? Are we going to see it dip back?
Well, the market, I think, hopes it's going to be a nice soft number, but it's hard to tell. Oil has dropped over the past month, but this is a lagging thing, so we're not going to see it in inflation yet. I don't know. I mean, I don't know. I would tend to say, what are we expecting again?
We're expecting 8.1 versus 8.5 prior on and that's on the CPI, but the core is expected to rise to 6.1 from 5.9. So a bit of a divergence there.
Yeah, it's a tricky one.
Yeah.
Okay.
Any thoughts on that, mate?
No, I mean the same idea. It should come off a bit in as per market expectations, but then if the core remains sticky and even ticking up a little bit, is the headline number really going to move the markets? Yeah, they will. It will be market movers because the bond market is so fickle, and we have seen so many repricings over the past months that whatever it comes out, it's going to move markets. But to which side? That's another problem, because this morning when people were already saying like, oh yeah, expectations for a weaker CPI, so the dollar is lower, but then it doesn't show in the yields or in the bond market. It does not show. The US 10 still around 330. The 3-year at 258. The 2 years are still above 350 as well. So I mean, the yields market are not telling us that they foresee those yields to come off on the upcoming CPI. But of course, we'll see what happens in the US session today, because they haven't been around.
Yeah, but it could be another great trading opportunity. If the data does come in soft, the market's going to start second guessing the Fed again, and if the Fed are going to stick their path as they've been telling us, at the FOMC they could come out and say, don't care what the CPI says now, we're going to keep going because there's a lot to be done yet, and then we see the market turn right around again. So it's going to be very interesting that tomorrow. We are in the Fed blackout that started Saturday, so thankfully we're not going to get floods of Fed central bankers coming out with their comments. I always like it when it goes nice and quiet there. Just to highlight something else as well, next Monday will be a UK bank holiday, so markets close next Monday for the Queen's funeral. There has been talk that Canada might do the same, obviously being part of the Commonwealth. So they may shut on Monday as well. No data due from the UK next Monday, as far as I could tell. Canada had PPI out that day, so that might go missing. Australia as well has declared a day of mourning, National Day of Mourning, on the 22nd, so a bank holiday there. That comes a day before they have a football bank holiday for a big football match over there in Victoria, the state of Victoria. So that they're going to get themselves a nice 4-day weekend there, all right for some. So just to let you know, that Monday the UK will be shut. I don't think we're going to be running a flow show because it is the funeral, but just to give you forewarning of that. Right, now let's get stuck into the markets and what's been going on. And as Kay's been mentioning, yield really holding up, given everything that we've had out recently. We look to be in lockstep at the moment. Dollar yen's pretty much in lockstep with the intraday moves right now, as you can see, pretty much tick for tick, if you like, what's happening there. We have had a solid bounce though since we had that low last week, so that is going to pin us as a level moving forward. Can we get back up to 144? I don't know. I was looking at 143, 143.50 as to perhaps define the top side range, and here we are. 143.50 has been the high this morning. 143 looks like it might be developing in sort of before and after events, so it's becoming a little bit pivotal. If we break above, we tend to hold above, but then we're coming back down. So keep that as a consideration from here. If we find further resistance into there going into the US session. That might mean that we could be pushing back lower down. But for now, I'm going to be watching. You can call it 141.50, 143.50. See how that range develops. I'm depending on what the US CPI does tomorrow. If it's nothing of any note, I'm potentially going to be looking for this to get a little bit of consolidation coming into this one. But if we do get a big move or quick move back above 143.50, we're going to be looking at 144 area. And really, to keep this whole phase alive from this break of 140, we need to get back above 144, get it back above there, and I think we're going to be pushing on for the highs again, and maybe a break and a further step up. But the rhetoric has done a bit for what we've seen here, but we've seen that before earlier in the year, and it didn't last too long, and we made fresh highs after that. Kay, what do you think? A bit of ranging going on here?
Yeah, as I said as well on the chat last week, I expect now the market to be in sit back a bit and wait what Bank of Japan is going to come up with. If we still have to wait until the 22nd, so we still have like 10 days 10 days to go. But in the meantime, I'd expect anyway, for now, that the market is going to be a bit rangy. I do think that some, or at least a good part of the players may think that the move up to 145 could actually trigger some firmer action. But looking at the yield differentials and looking around now how oils and commodities are behaving, there's not too much reason for really to go and buy yen in a big fashion, so in a big way. So yeah, I do think we are going to be more in ranges.
Yeah, definitely, mate. Looking at euro dollar, you know, here we are in a bit of a coming up in a bit of an area that we've messed around with before in the 101.70s. Had a move to 102, held the big figure, which was prior resistance after the breakthrough and that move from the 103.40.60 area. I'm still pretty neutral while we're messing around in between these ranges 99 and that 103.40 area. You know, we seem to be getting a break this morning, and now it's all gone flipping into a turnaround again. I've not got any great conviction for any side right here at the moment, except to maybe test the lows if we get down to 99 again for a long, and potentially short up into this area here. In the middle here, it can do its thing as far as I'm concerned, and that's reflected also in euro sterling. I was short a bit last week into 87, managed to get a bit away in the dip. We've had a move above 87 this morning, but it just hasn't really taken out the prior highs in this 20 area, and that's really the break point. So my short, I thought, was in a bit of trouble. Got to 22, I got to stop at 87.30, but as I've been saying in the chat, I've been looking at this one and saying here on the show, I've been looking at this one for a potential break, but it seems every time we get up there and move through, it doesn't look conclusive enough to try a break long. And here we are, you know, dipping back under the level again. I've got no, if this was a purely euro move, rather than the differentials between the euro or euro dollar and cable, I might think about the break trade, but I don't see any fundamental reasons to pile into euro longs. And until that changes, I just don't trust these sort of breaks. They don't, you know, we come up against the prior high, couldn't break it, and it's gone reverse again. So I really don't have a conviction that when I see euro sterling moving up, it's because everything's rosy in the eurozone or Europe, and that's a reason to buy the euro. So fortunately, I haven't got stopped out thus far. I'm still looking to work 86.50s for another slice off. Going to see how it goes there. But on the flip side, you know, I've been waiting forever for a move down to these prior lows in the low 83s to start building a proper long position. One I had earlier this year that I folded just before the summer holidays because it was doing nothing in this area but bleeding money on the costs. So I've got out of those. Haven't taken advantage of any of this move up. Again, still got low conviction in this one. Another one I just want to show quickly is $1. Both me and Kay playing this one. Two-sided. He prefers the long side right now. I'm in shorts off the big figure up at 7. Looking for a move under 91 and more so under 90 if I can get it. The 38.2 fib, you can see there's 6.8897, call it 6.89, comes in round about a bit of an area of support and resistance on the move back up in August, sort of from 68 70 up to 6.8920 ish, so 6.8870 to 6.8920. So that's really a decent area to look at. If we break under that, then we could be heading further south. Kay, what are your feeling on this one?
I think Stelios wanted to say something.
Sorry, mate.
Yeah, no worries. Just wanted to add something on the euro. I was just wanted to say that for me, on a macro level, things are starting to change a little bit with the euro. I mean, and I do mean the ECB getting more hawkish. They did the 75, as we all know, and it was not fully expected. It was between 50 and 75, and yes, every time they try to talk it down, but I think a shift towards more hawkish, or should I say rather the divergence between the Fed and the ECB, I think is going to be narrowing. So in my opinion, there is a reason to start thinking about structurally being long euros. Obviously, the problems with energy are huge. But again, as we've said before, it only takes, one positive headline, one piece of progress in that front, and then I think the euro is going to fly. But for now, I think the ECB is more hawkish than people expected, that's for sure. And there is a risk that they're going to perhaps try to normalize rates. They did talk about 2%. 2%, I think, is going to be done very quickly. But I just have this feeling that the ECB turning might be, at least for the next few months, might be a nice little trigger for more euro strength. But obviously, we wait to see what happens in the European winter, which is not going to be very pleasant. I'm going to tell you that.
Yeah, I think we've been saying I think that's what the market's now waiting for, to see how bad it might get over the winter. I mean, we were all commenting when we were down here at the 99s that there was continued bad news being thrown at it. Powell sticking to his hawkish path and that sort of thing. Yet we couldn't break any lower. We had the tests under there, and it just those are the times when you look at it and think, right, if it ain't going down with everything that's being thrown at it, that's negative or could be construed as negative, you've got to think there's only one other way it can go. I think my issue is, I still can't really be hugely long it because of the what's been going on. But yeah, if we get a break up here, this 40-60, 103, 40-60 area, technically that's potentially a trade to take on the break if it does go up, because that would suggest that something has fundamentally changed for the euro. But while we're in this range, I haven't got a side, really. I'm really not got a side in this.
I agree that 104.60, whatever it is, that will mean new high, and for me it means that something has changed, and that's where I'm going to get interested. Before then, yes, it's positive today and it's looking better, but it's still in the broad range. So I wouldn't be too hasty. That's why I'm not saying that, the macro environment has changed. No, not yet, but it's kind of looking like it might do. So just keep
there might be a
eye on
subtle shift. Yeah, a subtle shift. It only takes a little snowball to get rolling to turn into a big snowball. And that's that's why we watch the price action, and you know, as we say, it couldn't go down anymore. So natural that it can go the other way. How far? That's the question. So, okay, back to you on the dollar yuan.
Yeah, I still think we are in a situation where things in China are not particularly looking up. It's been coming off on the dollar. Well, weakness is a big word on a dollar setback. But it's interesting, this whole zone to me, 685 to 690 is going to be relatively important for holding this whole move. But until it goes there, as people know in the room, I'm always trading my stuff around. So I have been selling upstairs a fair bit of what I was long. So I'm really waiting to see how low I can get some to get back longer. But my base idea is that CNH at least is still going to remain under pressure. If anything would really start to change for the dollar, I might try to find another currency against it, and perhaps something like Aussie or Kiwi CNH. I'm now thinking of, because they do have a real correlation, but if Aussie and Kiwi may be moving just that little bit faster on the back of dollar moves than CNH, which is going to be really taking care of only itself, and the situation over there is not great. But I'm just thinking about it. I'm just thinking about possible scenarios, what I should do if the dollar suddenly starts to weaken.
Yeah,
I mean, reflection.
Yeah, I was looking at Aussie one last week, and it looks a bit
nice,
more
in the
stable.
460s.
Yeah,
it's looking pretty cool in the 460s if we look at that, right?
Yeah, but it's looking a bit more stable than at least dollar one, which again shows that, you know, it's maybe the US dollar is taking the main weight of the moves there that we've seen. But you know, I'm short to K's long, but I'm of the same opinion as he is. You know, China has got some weakness problems coming into it. They're easing, they're cutting, you know, a lot of their rates. The big one's still potentially to happen, the RRR cut. If I wasn't short and I'm basically just trying to run it as far as it will go, I would probably be flipping to the other side like Kay and trying to grab a dip. So, you know, again, I just want to highlight you can have different opinions, different trades, but you know, there's opportunities there for both sides to make money. So there's no competitions here in trading, and certainly none in our trading room. Any of you guys and girls got anything you want to have a look at? Kay, I know you've been chopping your charts around this morning.
I was doing updates, and I had to take care of some stuff, so my charts have been set back to a prior date, so I can't really show much right now, but I'll update everything for tomorrow again.
Yeah, no problem. I'll have a little quick flick around before I let you boys and girls go. Oil there, need to scrap that fib because that's busted. So let's get rid of that for now. He says, come on, there we go. Oil, you know, we had this move down on Friday down to near the 80 mark. That's had a bounce as well. Has the situation changed here? Not really. The trend at the moment is clear for all to see there. So keep an eye on that as well, because obviously that's going to play into the hands of dollar CAD, which is back into, or was back into 130. Let me have another check. Yeah, so we had this move to 132, failed in there up towards this channel top that I've got in play. Couldn't hold 131, the top of this band, this long running band that I've had for months and months and months. We've got a little bit of a zone down here, which not something I trade, but something I keep an eye on, one of those speed humps, let's call it that, 29.50, 60s. keep an eye on there, because when we do get down, when we've been away and get back to this area, it can mess around a little bit. Otherwise, from here, 129 is going to be probably the key level from here. If we hold that, we're potentially going to stay in the zone for a move back higher. But here again, it's for all the moves we've got, it's a lot of sideways action over the last few months. Really no resolution either way where this one's going to go. The top side is becoming sticky into 132. That double top there, typical classic pattern on the text. So keep an eye on. I might have a little look at if we get down to 129s, depending on what the news is looking like or the drivers behind it. Potential for a long there into 129. Doesn't need to be big risk, 20-30 pips on it, and then maybe see if it does break. If it holds a break and we start seeing that area becoming resistance again. So yeah, that's a quick introduction this week. I'm never much good on a Monday. I don't know about you lot. It's usually Tuesday before I'm firmly in the gist of it. So we'll call that an early session today. As always, thank you very much for coming to the Flow Show. We look forward to speaking to you all through this week. We'll have a little bit more, as I say, on US CPI tomorrow, the expectations, where the market's leaning, where the Fed's looking, and what those expectations are like and how they might shift over the inflation. So until tomorrow, have a great day, everybody. Thank you, Kate. Thank you, Stel. And we shall see you tomorrow.
Cheers, guys. Take care.
Have a good day, guys.